So by seeing the thumbnail, you'd probably be wondering, how is it possible to make an income from the stock market without having any capital at all? Yes, it is possible, and it is arguably one of the best ways to trade. This method of trading is applicable to both a person who has not been trading in the market but has a lot of long-term investments from mutual funds, FDs, even stocks for that matter, and also for a person who has not started their investing journey at all but just wants to start right now. So this is all possible with a concept known as pledging. So in this video, we'll learn about how you can start making an income from the market without having any cash at all using the concept of pledging. We'll explain what is pledging, why is it beneficial, we'll explain the advantages as well as the disadvantages as well. So this video is part of a 2-video series on pledging, where in this video we talk about everything you need to know about the concept of pledging, and in the next video we'll learn a pledging strategy which is used by pro traders in the market to accelerate their returns. So do stay tuned till the end of the video. The name is Ajay Ajit. Welcome to Market Feed. So let me start this concept of pledging with a super easy example. Say you're a businessman who wants to put some money into his business to grow it. But hey, you do not have capital, so what can you do? You might have multiple options. You might have assets like gold, land, properties with which you can go to any financial institution, say be it a bank or even an NBFC. You can put that property or gold as collateral and you can get a loan against that property. This is what you commonly see in the world today. And how do the banks make money? They charge a hefty interest on this loan, and that is how they make up their money, by charging you an interest on this loan. Now say you, the audience, you want to start trading in the market. You have seen multiple videos here and there, but you do not have any cash to trade. But you have been investing in the market for a long time. Let's say you have other investments like stocks, mutual funds, FDs, bonds, etc. So what you can do here is, you can go to your trading broker. You can go to the broker just like the businessman went to a financial institution. You can go to the broker and say, hey, here is my collateral. Now give me some margin so that I can start trading. This margin is called as collateral margin. But one key difference from the last example of the businessman, you do not have to pay any interest on this collateral margin that you are getting from the broker. But there are few things you have to note. The first thing that you have to understand is that while you get this collateral margin, the only types of trades that you can take is equity intraday, futures, both you can take long and short, and option selling trades. No, you cannot buy a stock and hold it for the long term using this pledging method, nor can you buy options with this method. Yes, so this is pledging. You can take an unutilized investment, let's say a mutual fund, a bond, an SGB, that is a sovereign gold bond, and you can turn that into a cash flow generating asset for you. Now that you know about the concept of pledging, let us look at some advantages of why you should be doing this. The first advantage is obvious. You do not need to bring in fresh capital to start trading with this method. And you can think of this as infinite returns. Let's say you're making profits on an investment which you did not bring any capital for. So the denominator is 0, but you're making profits in the numerator. That means your ROI, your return on investment, is technically infinite. You're making money from an unutilized asset. Advantage number 2. Your stocks, your mutual funds, your bonds, which you give as collateral to your broker in order to get the loan, they are safe with your account itself. Just because a broker is giving you collateral margin for all these assets does not mean you have to send these assets to the broker's account. This also has an additional benefit where in the rare case that a broker shuts down, the broker is not holding any of your cash. All your investments are tied down into your own demat account and you will be easily able to retrieve it. And the third benefit is that you can build a diversified long-term portfolio which is beating inflation, which is giving you good returns as the underlying, and on top of that you can generate a lot of income by trading as well. Just for giving you perspective, India's inflation last year was 7%. In fact, if you put an FD under your own name, you would have gotten 6% as interest. But let's say you build a diversified portfolio and you were able to get a return of 10 to 12%. Not only did you beat the returns that you would have received if you just kept cash in your broker's account, you also beat inflation by a long shot. Yes, Yes, so those are the three major benefits. But before jumping in completely into trading, you might be thinking, hey, what is the catch here? The broker is not charging me any interest and he is giving the money virtually for free. I would say it is overall very positive and everyone should be doing this method to trade. But there are few things that you should know before you jump into the world of pledging. You can treat these as disadvantages as well, or if you understand them well, you can use them to your advantage. The first concept that you need to understand is the concept of haircut. Just like in the case of that businessman, wherein if you had the gold and you went to a gold financing company and you said, hey, keep this gold, give me a loan. They would never give you a loan for 100% of your gold's value. The financing company there will take a haircut on your investment and they'll give you the remaining value of your asset as your loan amount. And just like that, in the world of trading as well, your broker will be taking a haircut amount. Let's say you bring in shares or mutual funds worth 1 lakh rupees and the broker has a clear list of items saying that, hey, if this is your investment, this is the haircut amount and this is the amount that you will get into your account as collateral margin. So let's say, for example, a haircut is 10% on a mutual fund. So that means if you go and give this mutual fund to the broker worth rupees 1 lakh, they will give you 90,000 rupees in return as collateral money. So let's say the haircut on a mutual fund is 10% as specified by your broker. This means that if you give him 1 lakh worth of this mutual fund, he will cut a haircut of 10% and he will give you 90,000 rupees as collateral margin. What you have to understand here is that this haircut is based on the volatility of the underlying asset. That means if you're giving a very volatile asset as the underlying, let's say stocks, mid-cap stocks, small-cap stocks, there is a chance that it may not even be in the pledging list and the haircut will be slightly higher. Let's say if you're giving mutual funds or even bonds for that matter, the haircuts will be much lower because you're giving an asset to the broker as collateral which is not that volatile. And along with this, you should also understand that this margin, this collateral margin that your broker gives you, it is always fluctuating. Let's say you gave that 1 lakh worth of mutual fund to the broker and he gave you 90,000 as collateral margin after his 10% haircut. Now, what if the mutual fund value shoots up by another 50%? Now you have 1.5 lakh in mutual fund and automatically the margin that the broker gives you will also increase. So earlier, if he was giving you 90,000 for a 1 lakh rupee investment, automatically the broker will be giving you 1.35 lakhs for that 1.5 lakh investment. But do note there is a risk here as well. If the value of your underlying asset, your stock, your mutual fund, it falls, your margin money will fall as well. Your trading capital will reduce there. So let's get into the second concept, which is cash and non-cash components. So in this world of pledging, there are two types of securities. One is cash component securities, which are very stable securities that SEBI says are equivalent to cash in your broker's account. These are assets which include securities like liquid Bs, other short-term debt funds, government bonds, as well as sovereign gold bonds as well. Now, on the other side is your non-cash components. Your normal holdings like stocks, mutual funds and ETFs are coming as a non-cash component according to SEBI. So why do you need to know this? So let's get into the third point to understand why it is important, which is the 50-50 margin requirement. So SEBI mandates that you need to have a 50-50 split between your cash and your non-cash components. So let's say you want to take a futures or an option selling trade which requires a margin of rupees 1 lakh. So here according to SEBI, you need to have at least 50% of your holdings in this cash component segment and the rest can be in the non-cash component segment as well. Now this is mostly enforced for overnight trading positions. It is not that enforced for intraday trading positions. So even if you do not have this 50% minimum requirement in non-cash components for overnight trades, most brokers will give you extra margin in return for some interest payments. This varies between 12 to 18% across brokers, but I would not suggest you to use this facility. Do try to keep this 50-50 rule in your account. Now the fourth point is that you would have to maintain some cash with your broker's account so that you do not face any chance of liquidation at all. So let's say you've given broker assets worth rupees 1 lakh and he has given you collateral margin in return. What happens if you make a loss here? The broker does not have any cash to settle your loss and the broker will have to square off your pledged components in order to settle this with the exchange, right? This is why you should maintain some amount of cash in your broker as liquid cash so that you do not have this issue and you would not have to unpledge, or the broker will not have to square off your holdings at all in case of any losses. So I would suggest you to keep a 5 to 10% margin as liquid cash in your account. This will also help you if you're someone who is selling option with hedges, because as I told you earlier, you do not get to use this collateral margin for option buying, and everyone who sells option with hedges, you'll have to buy options as well, so you cannot use this margin, and that's why you'll need to keep some extra margin for buying as well. Now coming into the fifth point, because I know I told you earlier that there are no interest charges associated with this concept of pledging, but there are pledging and unpledging charges that certain brokers do live by. So let's talk about that. Let's say you have holdings of 1000 shares in Reliance, right? And then you want to go and pledge this with your broker. No matter how much shares you have, if you place a pledge request with your broker, the broker usually takes a charge of 20 to 50 rupees per pledging request. That means for that 1000 shares you're pledging, you'll have to pay a one-time minimal nominal amount of 20 to 50 rupees. Some brokers might also charge you a similar nominal amount when you're trying to unpledge your stock or mutual fund as well. Now that you know the advantages and certain disadvantages or points to note, let's get to the next segment, which is how you can start pledging. Most brokers have a very solid, reliable pledging system. So for accessing this, I'm not going into detail showing you step by step like we showed for the CDSL video. So I'm going to give you some blanket instructions here. So whoever your broker is, go to their back office portal. And once you get to this back office portal, you can see your securities and there will be an option for pledging these securities. So once you start the pledging option with your broker, you will be redirected to a CDSL page, right? That is a depositories page where you will have to give confirmation with an OTP to your registered email and mobile number. And boom, after this, the funds will be available in your account within just 10 minutes. In some cases, I've seen it happening in 1 day or 2 days as well, not longer than that. Remember, you can do this process only during market hours. And now for unpledging, go to the same portal and you can give an unpledged request here. And do note that you can only sell your shares, stocks, securities, whatever, only after unpledging. So do plan accordingly. So here the next question is, what should you pledge to start trading in the market? So if you're already an investor, you have certain assets like mutual funds, stocks, bonds, SGBs, with which you can start pledging and start your trading journey. You do not need to bring in any fresh capital at all. Now, if you're starting fresh, that means if you're coming in fresh with some fresh capital, you want to buy some assets and you want to pledge them and start trading, then you need to just keep these few rules in mind. You will need to buy the right mix of assets which the broker tells you has the lowest possible haircuts. Like for example, you can go to any broker's page and you can see what is the assets available for pledging and you can see the haircut there as well. Now, once you understand this, you can select the assets with the lowest haircut. And after that, you'll also have to keep in mind the 50-50 rule, which is keeping cash components of 50% at least and having the rest in non-cash components. And the last point would be to buy assets with low volatility, which is keeping in mind that this is your trading capital. If you put it in a high volatility asset, your trading capital will also keep fluctuating, which we do not want as traders. And the best thing you can do is to invest in low volatility assets so that you are not affected by this. So a very good starting point for you would be to invest 40% in gilt funds. Those are government-backed securities for which you can invest 40% of your capital. These are considered as cash components, and 40% you can invest in certain low volatility assets like ETFs or mutual funds, which are giving you very low haircut. You can even consider Nifty Bs here as well. So with 10% of the rest of your money, you can invest in sovereign gold bonds or even gold ETFs for that matter, which will keep your portfolio non-volatile in tough times. And the remaining 10%, as we talked about earlier, you can hold it as pure cash with your broker's account. So yes, hope that is clear. And do not forget to subscribe, because the next video is about pledging strategies that pro traders use, with which you can supercharge your investing and trading returns. And if you do not know how to start trading with this pledge margin that you received, do fill out the form in the description down below, where we'll teach you how to automate all the trading strategies that you see on MarketFeed app on your broker's account itself. Do comment down below if you have any doubts about this concept at all. So yes, this is Ajay signing off. See you all in the next video.